Family, right now the market is moving off one thing: relief. The market believes the worst case scenario may have been avoided after the Trump Iran peace agreement headlines started circulating. That immediately caused a risk on reaction across the board. Crypto pump, stock bounced, oil dropped, gold cooled off, all the fear backed off. And why? Because markets hate uncertainty more than almost anything. For weeks, investors were pricing in the possibility of higher oil prices, more war escalation, supply chain disruption, inflation staying high, delayed rate cuts, global instability. But when news hit that the United States and Iran were nearing a peace framework, traders immediately started rotating back into risk assets. That is why you saw XLM, XRP, ETH, hype, uh, Zcash, and most altcoins even explode higher. This was a classic liquidity rotation. Oil dropping is one of the biggest reasons the markets reacted positive. When oil prices rise aggressively, inflation usually rises with it because transportation, manufacturing, food, shipping, and energy costs all go up together. But now oil is falling because the market believes the Strait of Hormuz may remain open and Middle East tensions could cool down. That matters because if inflation cools down, the Federal Reserve has less pressure to stay aggressive. Rate cuts become more realistic, liquidity conditions improve, risk assets like crypto and tech become more attractive. That is the bullish case the market is trying to price in right now. But here's the problem: the market is moving faster than the confirmation. Pay attention, family. Right now, people are trading headlines, not long term certainty. This is why I keep saying do not get trapped, because a relief rally and a confirmed macro reversal are not the same thing. For this market to actually become healthy and sustainable, we still need several things to happen. First, we need the DXY to continue falling. The DXY measures the strength of the US dollar. It's very important, family. A strong dollar usually hurts crypto and risk assets because money flows towards safety and cash instead of speculative assets. Historically, Bitcoin and crypto perform better when the dollar weakens and global liquidity improves. If the DXY starts ripping back upward, crypto could get rejected hard again. And second, we need bond yields to cool off. The high treasury yields go, the harder it becomes to justify how high valuations in tech and crypto. Money starts moving into safer yield generation, generating assets instead of speculative growth plays. And third, we need inflation data to continue improving. 1 week of falling oil does not solve inflation. The market still needs better CPI, better PPI, cooling labor pressure, lower energy costs over time. Without that, the Fed could remain restrictive longer than people expect. And fourth, we still need crypto regulation clarity. I keep speaking on this. This is one of the biggest missing pieces in the market. A lot of institutions want exposure to crypto, but they do not want legal uncertainty. That is why people keep watching the Digital Asset Market Clarity Act. The bill is designed to create clear rules in digital assets and market structure. If stronger regulation clarity comes, more institutions can enter, more ETFs and financial products can launch, banks become more comfortable interacting with crypto, liquidity can increase dramatically. That is one of the biggest long term catalysts the market is waiting on. However, I don't think it's going to pass. Now, let's talk about SpaceX. A lot of people expected pure insanity after the IPO, but the stock sitting around stability instead of immediately going vertical actually tells you something important. The market is still cautious. People are interested, but they are not fully convinced. The market is still trying to figure things out, trying to figure out this valuation, liquidity conditions, AI spending, sustainability, rate environments, whether this rally is temporary or structural. Even the biggest names in the market are not moving with complete confidence yet. And honestly, that is healthy. Parabolic straight up, markets with no hesitation, they usually end up violently crashing down. Right now, the market is basically saying, Maybe the worst is avoided, but we still need proof. That is the real situation. So, what should people actually watch now? This is what you should be watching. You should watch the DXY, the oil, bond yield, stablecoin inflows, Bitcoin dominance, volume, the inflation data, the Federal Reserve language, regulatory progress, whether Bitcoin can hold major levels instead of just touching them. Because if this rally is real, the market will build structure. If it is fake, it will fade. The second fear returns, and that is the difference between a headline pump and a real bull market continuation.